A holiday-shortened trading day on, yes, a holiday-shortened week. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking you off to the closing bell here in the U.S. That's coming at 1 p.m. for equity markets. You take a look at the S&P 500 right now. I would call that profoundly unchanged. Take a look at volume. Down about 40% from the 20-day average, probably what you would expect. Big tech off a little bit more than NASDAQ 100, off by about 0.2%. All the while, you're seeing that bond sell-off reignite. 10-year Treasury yields currently up about 8 basis points. We're still below 4.5%, though, so it really tells you how far this bond market has come. And of course, it is Black Friday. It's the kickoff to the holiday shopping season, so we've got an eye on retail right now. You take a look at XRT. This is the Spider Retail ETF, currently up about 0.2%, Romaine.
Yeah, we're going to talk a lot about that today. Not a whole lot of price action going on, of course, on what is a truncated day. Tesla, Lilly, Exxon are higher on the day, but there is a big point drag from some of the other heavyweights out there. That includes Apple, that includes Microsoft, and includes NVIDIA, which are really restraining any possibility for a broad market advance, at least on this day. NVIDIA on track right now for its third straight session of losses. That's going to be its longest daily losing streak in about a month. Reuters reporting that the chip company has told customers in China it's delaying launch of that new artificial intelligence chip until the first quarter of next year. Meanwhile, we did get some economic data this morning. U.S. Purchasing Managers Indexes are out, showing composite and services figures marginally outpacing expectations, while manufacturing PMIs marginally underperforming. But the more intriguing nugget in that report is the trend of companies shedding jobs, and that has finally spread beyond the manufacturing sector to services. The S&P Global Flash Composite Employment Index was down 1.6 points to 49.7, just below the level that separates expansion and contraction, and it was the first decline for U.S. service providers and manufacturers in tandem since mid-2020. This is also, of course, a big week for retailers, with consumption expected to rise this holiday season, but at a slightly slower pace than in recent years. Adobe, which tracks online sales, saying consumers, they already spent $5.6 billion on Thanksgiving Day, Katie Greifeld. That's up 5.5% from last year. What were you doing yesterday?
I was not shopping, but apparently a lot of people were. And it's slower growth, as Romaine pointed out, but still growth nonetheless. As he mentioned, of course, Thanksgiving Day up 5.5% shopping on Thanksgiving Day alone versus last year. Black Friday today, of course, you're expected to see another bump up. And then Cyber Monday, we were talking about this a little bit on, I guess that was Tuesday or Wednesday. It feels like a long time ago, but Cyber Monday is the day that's really seeing the most growth. That's expected at 6.1%. So clearly growth nonetheless, people still shopping. And let's look at where they're finding the biggest deals. I thought this data was really interesting, of course, coming from Adobe Analytics as well. If you're looking to buy toys, now is the time. On average, you can see a discount of 35%. Electronics too, apparel, also seeing those big discounts. But then you go down the list, what you're not getting as much of a bargain on: TV, appliances, and then furniture. Still a 19% discount, but not quite the bargain that you're getting when you're buying toys, Romaine.
Yeah, everybody looking for a read now into how strong this holiday shopping season is going to be, and who better to talk to than Shopify, the second largest online retailer in the U.S. That's even more so than Walmart, more so than eBay. And joining us right now is the president of Shopify, Harley Finkelstein. Great to have you here in Studio 2 on what is traditionally, I guess, going to be a busy season for you. I was going through some of the numbers on Shopify from last year. And correct me if this is wrong, but if you combine Black Friday and Cyber Monday, you had something like $7.5 billion in combined sales.
That's right.
That was spread out among 52 million consumers. And I'm wondering, the big question everybody wants to know, is that number going to be higher this year?
So far, so good. We're seeing absolutely that it is higher. In fact, you know, as you said, it's sort of our Super Bowl right now, and the Super Bowl for the millions of merchants that we power. But if you look at the numbers, and actually anyone can see a live view of all global shopping on Shopify, go to shopify.com/BFCM. And right now I have new numbers for you. So average cart price right now is $119. That's up from last year. As we speak, we're seeing about $3 million of sales every single minute and about 24,000 orders every single minute.
Wow.
But there's really two trends that I think are emerging here. One is Gen Z are really powering this economy. The consumer is strong generally, but Gen Z are really doing great. The second thing is this idea of self-gifting. While most people use Black Friday to buy gifts. We're seeing more people buy for themselves, especially big ticket items like vacuums and Uni pizza ovens, for example.
Yeah. Okay. I'm not familiar with the Uni pizza oven, but I'm going to Google that as soon as we get off air. Cool. I'm sure everyone's cooler than me. Well, but when we talk about those folks who are doing that, whether they're gifting for themselves or for other people here, did you see an uptick in that type of activity prior to this week? Because we've heard from some other retailers, they were basically saying that even back in late October, they were already starting to see holiday shoppers.
Look, I've been coming on your show every Black Friday for years now. What I can say is that this weekend from Friday to Monday is now extended to a season. We started seeing deals as early October, and we're going to see deals right up until Christmas. So this, in some ways, this is sort of a canary in the coal mine for how consumers and retail is doing, and it's strong, but we're seeing it extended beyond the weekend.
Well, Harley, given that extension, do you worry at all that Black Friday is losing its punch? I mean, I spend a lot of time on social media, for better or worse, and I mean, I've seen a lot of short TikTok videos to the effect of you're not seeing the huge 80% discounts that maybe you were seeing a decade ago. By spreading it out, I mean, do you lose some of the impact that maybe previous Black Fridays had?
We're not seeing that at all. In fact, we begin to track Black Friday sales at midnight in Europe. And so we actually saw the $1 billion mark cross last year early in the morning on Friday morning. This year, that $1 billion mark was crossed before midnight EST time. So we're seeing more people buy and they're spending more money. In fact, we've now seen about 10 million shoppers to date in the last 12 hours or so buy across Shopify stores. So it doesn't feel like Black Friday is losing any luster, just the opposite.
And what are they buying? I mean, you mentioned some of those big ticket items, the pizza ovens that Romaine is Googling right now, but what's the division?
Actually, I feel like Katie should be Googling that as a gift for someone special.
Or maybe I'm going to treat myself, like it seems like a lot of people are doing. But what's the breakdown between some of those big purchases, the pizza ovens, the dishwashers, et cetera, versus smaller items?
Yeah, so a couple things you should know. Number one is when I talked about Gen Z being the power consumer, they're buying from small businesses predominantly, and they're doing so in a way that actually creates really big businesses. So one, there's a lot of intentionality to buy from your favorite brands. So brands like Alo Yoga and Viore and Skims and Mattel and Glossier are doing really well right now rather than more of the big department stores. That's the first thing. There are two major categories that are really winning right now. One is kitchen appliances or pots and pans and aprons, but the second is children's toys. Within children's toys, there's something fascinating, which is a lot of the toys that are being sold right now are toys for kids to play inside. So things like doll houses and dolls. So it seems like the U.S. consumer is really getting ready for the winter to buckle down and stay inside. But generally across every category, I mean, vacuums are up 100% year on year right now as a category.
I'm absolutely fascinated by this. And just a few seconds ago, we were showing some of that, was it Live Globe?
The Live Globe.
Data, which was very fascinating. Obviously, at Bloomberg, being a data-driven organization.
Pretty cool.
We eat this stuff up.
Me too.
But I am curious as to how you utilize that data, particularly for the sellers on your on the Shopify platform. Seeing this stuff in real time, does that allow them to maybe make adjustments if they can see that, okay, maybe we are trending more towards doll houses and certain types of kitchen appliances as opposed to other types of items?
So, I mean, you're seeing that sort of at a macro level where anyone can see what's happening aggregate across the platform. But on an individual basis, every single store, every merchant on Shopify gets individual dashboards where they can see, for example, where their traffic is coming from, quality of traffic. They can see what are their highest selling products. They can provide discounts. So part of what we do as a platform, and we now power, as you mentioned, about 10% of all U.S. e-commerce, is we give them data and insights to make better decisions. And we do that on a macro level, but also on an individual level for each merchant.
I am curious as to the importance of this Black Friday, the holiday shopping season, I should say, for Shopify overall. I know that traditionally Black Friday is called Black Friday for a reason, because that's when all the retailers would effectively go into the black. But we know that's kind of shifted a lot. And Katie kind of touched on this earlier. But how do you sort of take the momentum from the holiday season and translate that into January, February, and beyond? Yeah,
look, usually what happens is this sort of period of time from Black Friday to Cyber Monday, or even the entire shopping holiday season, does provide a little bit of a proxy for how the rest of the year goes. And historically, when we've had a strong holiday season, the rest of the year has been pretty good as well. So I think it does provide something. I think there's also sort of this hangover of people are worried about the U.S. economy, macro trends. But I think the big sort of aha moment for us is that the U.S. consumer is strong. They're sort of the superheroes of the economy, but they're buying very intentionally. They're not buying necessarily a lot of quantity. They're buying a lot of quality. So instead of buying their 10 T-shirts, they're buying 3 from the brands they love most. And that intentionality and buying from brands they love has been good for Shopify because, frankly, most of the brands that consumers love are powered by Shopify.
Well, tell us about some of the most popular brands right now. I mean, I'm looking through your list of notes. I see Merit Beauty. I also see Victoria Beckham Beauty. Of course, Victoria Beckham really in the news right now, coming out of that Beckham documentary.
Yeah. Look, I actually, just before I came on, I went to our database and to look at what was trending. I looked at, Shopify.com/BFCM, and what I noticed was a lot of the major trending products, Merit Beauty, Victoria Beckham, Sheertex, a lot of them are in the beauty and cosmetics sort of space. But we're also seeing companies like Viore and Alo Yoga, and just driving around New York City here, you sort of see Skims everywhere right now. So these up-and-coming direct-to-consumer brands that have a very strong brand and high-quality products, those are the ones that are really doing the best right now.
And they make Skims for men,
They do make Skims for men.
I have heard that. I guess I have to get a little bit more in touch with
I didn't realize we talked about shapewear on Bloomberg, but maybe that's a good topic.
Frequently.
That's all right.
Yeah.
Okay, I'll try to, after yesterday's meal, I might need some Skims. Harley, this is great to talk to you, and some great data coming out of Shopify. Harley Finkelstein there, he's the president of Shopify, kicking us off to the close here on a shortened trading day, obviously much earlier than where we normally would be, but we're going to have full coverage of Black Friday and what it means for the health of the consumer and the economy. We're going to hear from an interview with Macy's CEO, Jeff Gannett, in just a second.
Plus, we'll get insight on the state of the jobs market and more from Gus Fauché. He is chief economist over at PNC.
And you might have noticed that U.S. mortgage rates are actually falling, and the demand to buy homes finally starting to rise. Insight on the real estate market with Uma Moriarty over at Center Square Investment Management. A lot coming up in the next 2 hours. Stick with us. This is The Close on Bloomberg.
Investors have lots to be thankful for.
The rally we've seen in equities.
Equity rally.
Classic year-end rally.
The holiday rally is certainly very much in force.
An economy that's looking pretty good globally, and risk sentiment that's picking up.
We're seeing this kind of soft landing celebration.
The market that is very enthused about a soft landing.
Inflation coming down.
Inflation which has come down.
Some of the heat pool in the labor market.
The labor market showing some cracks, but simply normalizing.
The Federal Reserve is done.
The Fed on hold.
So far, the Fed's making this look as easy as pie.
The probability of a soft landing has gone up materially.
All the things are moving in the right direction.
The market's moving in the right direction.
But it doesn't mean we should take them for granted.
Well, as you just heard, there's a lot for investors to be thankful for this year, and particularly this month, which has been unusually good for the bulls. And joining us now to break it down is Bloomberg's Jess Menton. And Jess, we know that November, we're up about 7.5% so far this month after a pretty ugly 3 months before that. What's gone right so far?
Well, part of it really has to do with seasonality. I know a lot of people like to talk about that, especially when after August, September, October, and typically September is the worst month of the year. But then when you have the calendar flipping over to November, and especially because also a lot of things that people might not talk about, there's a blackout period for buybacks that rolled off at the end of October. So there were a lot of companies that were able to step back in and then start repurchasing their stock. So that was something kind of happening underneath the surface of a lot of other things and dynamics, obviously, after a pretty bad 3-month stretch there. But if you look at the S&P 500, at least right now, it's up about 8.7%. And if you can actually hold that through the end of the month, that would be the second best November actually since 2020. But then if you pull it back even further on the SCAG Go in the terminal to look at a heat map, it's actually the second best November since 1980.
And not only is it the best, but I mean, when you just look at just the expansion of the rally relative to some of those big gains that we saw earlier in the year, it seems to suggest here that investors are finally starting to look beyond just the Magnificent Seven.
Right, and you're seeing that broaden out, especially I like to look at Weeb is another one with a lot of technical indicators in the terminal, but you can see especially the number of stocks trading above their 200-day moving average as well as their 50-day moving average on a shorter term perspective. So you're seeing that breadth broadening out. So it's not just like you're saying some of these growth
and
stocks.
And the 50-day was, I noticed that it was a couple days ago. It was like something like 85% or something.
Right.
The S&P was above that shorter term moving average, which is a good sign.
It is, especially when you look at also the 20-day too.
Yeah.
So whenever there's more than 90% of stocks trading above that, which that did hit that threshold earlier this month. So that was more of a bullish sign for technicians once they saw that happen too.
Okay, so you have good technicals, you have good seasonality factors to sort of fall back on, but you also have a lot of macro news as well. It feels like this month one of the biggest stories has been sort of conviction solidifying that the Fed is finally done.
Right, and then that December 13th decision that's coming up. But interesting enough, next Thursday is actually the 2-year anniversary when Fed Chair Jerome Powell actually had dropped transitory during when he was on Capitol Hill. So we're coming up on
now,
a lot has happened over the past.
Is that an actual national holiday? Or?
Yeah, is it celebrating?
Yeah.
But it's interesting because almost 2 years ago, that December meeting in 2021, that's when he was first flagging when they were watching the employment cost index and wages and being concerned about that. But it's interesting to look back what's happened the past 2 years and where the Fed has come and gone.
What's the appropriate gift for that?
No.
Yeah.
Things still cost a lot, so I'm not sure there.
A shipping container full of Chinese goods. Yeah.
Yeah. Bloomberg's Jess Menton, great to see you on set. I'm sure we'll be checking in with you soon. And it's interesting, Romaine, of course, all eyes on that December 13th Fed decision. I will point out that's also Taylor Swift's birthday.
Okay, I did not know that. But if anyone would make the connection to Taylor Swift, it is you. That'll be an interesting competition here. Where is your attention really going to be that day?
I'm going to have a split screen going on. I'm not sure what's going to be.
Because I feel like Travis Kelce really has to go big, right? I mean, given all the attention on that relationship, he just can't give her like a pair of earrings and call it a day.
He's got to win the football game, clearly. We'll get there when we get there. Are they playing that day?
I
don't know.
I don't think they normally play on Wednesday.
I assume it's a Wednesday. In any case, we'll think of something. Coming up, U.S. service providers and factories cut employment for the first time in nearly 4 years. We'll break down the latest S&P Global data next. This is The Close on Bloomberg.
All right, the latest U.S. PMIs are out showing businesses are increasingly cutting employment. The principal economist over at S&P Global Market Intelligence wrote that job shedding has spread beyond the manufacturing sector as services firms signaled a renewed drop in staff in November as cost savings were top of mind. Here to discuss is Gus Fauché. He's PNC's chief economist. And Gus, I do want to talk a little bit about the holiday shopping season, but we have to really kind of look at it through the lens of the health of the labor market. I don't think anyone is saying the labor market isn't healthy, but there is concerns here that we are starting to see some material softness in terms of hiring and, more importantly, retention.
That's absolutely right. You know, we have seen job growth slow over the course of 2023. It's still above the economy's long-term average. It's still a little bit higher than what the Federal Reserve would like, but certainly that is weighing on wage growth and income growth, and that could be a drag on consumer spending as we head into 2024.
This gets also to the question, when we talk about what people are going to spend on, and more importantly, how much they're going to spend, through the lens of credit card balances that are higher, the interest rates on their credit cards presumably also higher than what they were a year ago, and we know household savings aren't at the same level that they were a year ago as well. How much, if at all, will that affect what we spend and how much we spend?
You know, there are certainly some pluses and minuses there. So the higher rates will be a drag. You know, balances are high, but relative to incomes, they're still lower than they were before the pandemic. So consumers do have a little bit of room to borrow on their credit card debt as well. And we do continue to see incomes rise, although high inflation has been taking a toll there. Also, household wealth is up. So stock prices are up over the last year. Housing values continue to rise, and so households are wealthier. So overall, I think the positives for consumer spending outweigh the negatives right now.
Well, let's talk a little bit more about the labor environment, because in addition to those solid wage gains, you still have a solid labor market. But you point out in your notes that you do see some retailers reporting that they're pulling back on their seasonal hiring for the holidays, specifically around the holidays. What does that signal for what could portend for the labor market going into 2024?
You know, certainly that indicates that the labor market will continue to soften into 2024. I also think it's a reflection of the fact that most of the growth in consumer spending for holiday sales is going to take place on the online side rather than on the brick and mortar side. We're expecting to see double-digit gains for online retailers for the holiday season, but only in the low single digits for brick and mortar retailers. So I think we do see brick and mortar retailers cutting back on their seasonal hiring, and that will be a drag on the labor market and presumably a drag on consumer spending at the end of this year heading into 2024.
And Gus, I think that's a really interesting point, that you're still seeing people gravitate online versus actually going out and shopping in brick and mortar stores. I feel like over this past few years, maybe last year, the year before, we would say that's sort of leftover from the pandemic and some of the habits there. But is that just the new normal going forward, that it's online first?
Absolutely. I think that we have adjusted to that as consumers. We appreciate, the flexibility that online purchasing offers. And so we will continue to see online sales grow at the expense of brick and mortar sales going forward. And that has big implications also for retail real estate as well.
Yeah, and I mean, this is kind of, I mean, I don't know how it is in other parts of the country, but when you just kind of walk around New York City, and you can really still see the vacancies, that most of which, of course, popped up during the pandemic here. And I'm curious, though, as to how much that matters. I mean, a lot of those vacant storefronts are still, were previously occupied by companies that still have a very reasonable and large presence across the country in terms of physical stores, not to mention, of course, their websites.
Yeah, no, absolutely. And I think that, retailers will continue to benefit from rising consumer spending with the strong labor market, but we just are seeing that shift. And I think the implications are more for commercial real estate markets. And then obviously you throw in the problems that we have with office space, but it is going to take commercial real estate markets some time to readjust to these changes, both in office using employment, but also in retail sales and the switch to online sales.
This gets to the broader question as to how much some of these changes are going to be permanent and structural. The way we shop and how we spend, I think, was pretty much altered pretty dramatically by the pandemic. Does that trend continue to the point where, I don't know, 10, 15 years now, Gus, if we're still, knock on wood, around to have this conversation, we're going to be talking about the vast majority of sales being done online?
I think that is absolutely the case, that these are structural changes in the economy. They were taking place prior to the pandemic. I think the pandemic accelerated that. And I think one other structural shift is we've bought a ton of goods over the past few years because we haven't been able to buy as many services. I do think that we are going to see holiday spending, consumer spending, shift more to the services side rather than the goods side. And I think we will see some readjustment there. But I think that the online sales, those are here to stay, and that's a trend that's going to continue to increase in the future.
All right, Gus, great conversation, and really appreciate you taking time for us today. Gus Faucher, he's PNC's chief economist here, giving us a breakdown of the potential trends in retail sales and retail spending here on this Black Friday. And Katie Greifeld, I just want to point out, we have our reporters kind of fanned out around New York City, and Kim Basine, who's great, was basically taking a look at Fifth Avenue here in New York, which is just kind of supposed to be just a hive of shopping. He's basically saying it's dead. Dead quiet on Black Friday are the words that he uses here, basically saying that the longest lines anywhere along Fifth Avenue, in his words, were for Ralph's Coffee, which is Ralph Lauren's coffee truck. Not necessarily to go in and buy goods, but to buy treats and coffee.
I mean, it was a similar thing at the American Dream Mall, which I'm sure we're going to get it into. I mean, looking at some of the live reporting, it seems like some of the stores weren't even open at those early hours. So who knows? Yeah,
it'll be interesting. I think so much has changed, and so much of us are doing it online. And yeah, if you are out on Fifth Avenue, why not just get a coffee and pastry?
Go get a Ralph's Coffee.
Yeah.
This is the close on Bloomberg.
This is the countdown to the close. Keep an eye right now on the holiday shopping season, which is in full swing on this Black Friday, which is traditionally the start of the shopping season. And small businesses are preparing for Small Business Saturday. Joining us now to discuss expectations for the sector is Holly Wade, Executive Director of the National Federation of Independent Business Research Center. And Holly, I mean, we kind of make this distinction, obviously, between some of the big retailers and the more small businesses and the attention that we try to put on them. I'm curious, given the shift in so much spending to online and e-commerce, and the idea that so many small businesses, we should say, still predominantly get most of their sales through normal brick and mortar, how has that shift at all affected them?
Sure. So during the pandemic, a lot of small businesses did transition to having an online component or capabilities for their business, which has certainly been helpful in competing with those larger businesses that drive a lot of sales through online purchasing. So, we have stepped up that part of of online shopping, which is great for competing again with those larger businesses. And retailers are certainly looking forward to this weekend with Black Friday and Small Business Saturday.
What was the preparation like? Well, a lot of the narrative we got from these small businesses over the last three Christmas seasons was this idea of just how difficult it was to sort of plan out your inventory because of obviously the supply chain disruptions, but also just the shift in consumer tastes and what they were expecting to actually buy.
Absolutely. So the consumer shifts of what they're looking to purchase, as you mentioned, that's largely moderated for most small business owners. When we ask about supply chain disruptions, there's been, thankfully, a huge easing of that challenge that they told us last year was still a major problem for a lot of retailers. And fewer are having those challenges this year, which has been helpful in operating their business and competing during especially this weekend, which is such a huge part of so many small business owners' sales for the season.
And Holly, what ability do these small businesses, speaking generally, have to lower their prices during the holiday season? You think about some of these big retailers, the double-digit discounts that they offer on Black Friday and beyond. What should we expect to see on Small Business Saturday and heading into December as well?
Certainly. So our last survey, which was of October, we did ask about price plans going forward in the next 3 months. And specifically for retailers, only 3% that they were actually going or planning to lower their prices. So while there's likely the general discounts that often small business owners offer during this week, for the most part, that's not part of what they're looking to do, a week or 2 weeks out. They might have to compete a bit with their larger counterparts in that department, but it looks the same as last year when it comes to those saying that they're going to lower prices. It's about 3%, which is certainly not many. And for the most part, they're looking to stay about the same as they have been. However, those who said that they had increased prices or planning to increase prices has fallen off dramatically since last year, which is a good sign that inflation pressures aren't so strong.
Yeah, I think that 3% figure would surprise a lot of people. And of course, we have a very U.S. focus in this conversation, but we're actually talking to you, and you're in Zurich, Switzerland right now. So talk to us a little bit about whether Black Friday even exists overseas and about Small Business Saturday as well. Is that a thing?
So Black Friday, I've seen signs all over Switzerland, especially in Zurich here about Black Friday, a lot of commerce out in the streets today. I was out there taking a look to see what the discounts and small business owners were doing here. Some have extended it to a whole week, Black Friday week, but not so much on Small Business Saturday. So I think that needs to be the next jump, is to get Small Business Saturday involved in Swiss commerce.
Yeah, it's funny. I find it funny, too. I buy a lot of stuff online, and some of these companies that I buy from, particularly with the apparel companies, aren't U.S. based. So it's always interesting to see which ones do offer Black Friday sales and which ones just completely ignore it. And I'm curious as to whether the globalization of the way we shop and how everything is online, whether that is going to put more pressure on foreign businesses to kind of acknowledge what, at least here in the U.S., is really the biggest time of the year.
Sure, absolutely. I mean, they've certainly adopted the Black Friday in Switzerland and in Zurich, and that's a very prominent event here, which was very surprising to me. I was also surprised that very few were, or actually I haven't seen any for Small Business Saturday. And, we're all looking forward to Small Business Saturday tomorrow. I will be landing and participating back in the U.S.
All right, Holly, well, have a safe trip. Really appreciate you taking the time for us today. That is Holly Wade. She is Executive Director at the National Federation of Independent Business Research Center. Now, still ahead, we've got a lot more coverage of Black Friday and what it means for the health of the consumer and the economy. We'll hear from our interview with Macy CEO Jeff Gannett. This is The Close on Bloomberg. All right, let's get back to our Black Friday theme and focus on the future of department stores. Macy's CEO Jeffrey Gannett says that brick and mortar stores are, quote, still relevant. He spoke to Bloomberg's Caroline Hyde from the Macy's Herald Square store earlier today.
You do have customers that are under pressure. And so when you think about the inflation is still high, it's abating from the change of the inflation rate from last year, but it's still higher than it was last year. And customers have got a limited budget. Some of it is they're spending it in experiences and then in our discretionary categories. So we want to make sure that we've got the right price points across that entire spectrum. But you still give gifts. And this is where Macy's and Bloomingdale's and Bluemercury shine. So when you have this gift, somebody on your gift list, we're going to have the right content for you at the right price point. And we spend from when Black Friday ends to where we are right now, we've been spending a year getting ready for that. And we do trial runs on Valentine's Day, Mother's Day, Father's Day to make sure we've got the right gifts.
I think
we're ready.
You're ready. People are worried, analysts might be worried that you're kind of managing decline at the moment. What would you say to a comment like that?
Look, I think that if we weren't a department store today, we would invent one. So the idea about having multi-categories, being able to do that in multi-channels, we now have been able to get new categories in as a result of Marketplace, which is now online at both Bloomingdale's and in Macy's. So I bet on department stores. And obviously I made my career doing this. And it is it's still very, very relevant. We're obviously looking at where traffic is moving from on-mall to off-mall. We're obviously testing that in both Bloomingdale's with the Bloomies format and with Macy's with Macy's. And so we're going to be ready for where the customer is evolving. And we've got very strong assets to be able to do that, both on mall and obviously online.
Evolving into a world where we're all using chatbots and artificial intelligence are front and center, and these are sort of areas of investment?
Yes, absolutely. Because when you think about AI and machine learning, you think about when we have 40 million customers at Macy's, 4 million at Bloomingdale's, we know them very well. So to have all that data and be able to start to personalize content and values for those customers is where this is all going. How do you make your brand more relevant? And that is at a customer level. It's no longer broad-based promotion. It's the opportunity to be able to, I know Caroline, and based on what you buy, what you might be interested in, and to be able to serve that up in the way you want it served up is really the secret of success for an omnichannel retailer going forward.
You, of course, just mentioned throughout your career this is what you've been doing.
Yes.
For those who don't realize, you've worked at the Macy's brand for more than 40 years.
Yes.
And this is your last Black Friday.
Yes.
And of course, CEO since 2017. You have been thought of as a turnaround focus, the polarist, the way in which you have thought about personalization to e-commerce. You weathered, of course, the COVID in and of itself. Do you feel that you've got this Macy's where you want it to be as you look towards this being your last Black Friday?
Yeah, look, when I reflect back on my career, and certainly in my time in CEO, I didn't accomplish everything that was on my list. But look, the focus on relevant content, on amazing values, and on customer experience is clearly the path forward. And I couldn't be more excited about my successor, who is more than ready to be able to do this. He knocked the cover off the ball with respect to Bloomingdale's and what he was able to do there, how he was able to kind of help turn around the strategy of Bluemercury. He's now going to do that for Macy's Inc. So he's got a good game plan, and he's going to make it better.
And of course, that was Macy's CEO Jeffrey Gannett speaking with Bloomberg's Caroline Hyde earlier today. And to get a little bit more insight on how the holiday shopping season is shaping up, we're joined now by Bloomberg's Simone Foxman. And Simone, obviously the comments from Jeff Gannett, pretty optimistic. How do they tie into the broader outlook overall for this holiday?
Well, he was talking about how online consumer spending has been strong, and other data that we've got out from spending yesterday did come in a little bit ahead of expected. But I think the overall mood is you've got to be able to get that online consumer. You have had to be able to get them for the past couple of weeks as you've been offering promotions, and you need them to continue through Black Friday, through Cyber Monday, and then at the very end, towards the end. And Jeff Gannett was saying that there with Caroline. So I think that overall the mood is going to be a little bit slower in the actual store.
Yeah.
Macy's, it sounds like, is okay with that, but we'll have to see them deliver.
Well, I am curious too. I mean, if we can just stay with Macy's for a second, obviously he kind of extolled the virtues of brick and mortar, as you would expect them to, particularly given Macy's retail footprint. But that's a footprint that they themselves have scaled back a bit. And I thought it was interesting him talking about Terry Lundgren, his predecessor, and what he did with Bluemercury. There's another sort of Macy's business that they have that I'm blanking on the name that I never even knew was owned by Macy's. And I'm wondering if that becomes a strategy for them, where they sort of create these sort of ancillary brands, but differentiate them in a way that, say, like a Nordstrom Rack doesn't necessarily do.
I mean, the private label brands as well.
Yeah.
I think that'll be an interesting play, especially within a value-oriented consumer. Can you cut the cost just a hair to make them focus really on those brands? Can you cut the cost? Can you offer bigger promotions across your footprint?
And I'm always curious as to what gets people in the stores, though. I mean, obviously at Macy's, you're going to go and sit on Santa's lap, but or if you're going to Ralph Lauren, you get the,
I don't know why you're pointing
the
at
Ralph's
me.
truck. I don't know, Katie. I mean, I don't know. You're a child at heart,
I like
right?
Santa,
But it gets to the question too. I mean, like, is this still about trying to get people into the stores to buy something physical, or can they I guess make peace with the fact that a lot of us just want to do it from the computer or the phone?
I mean, you heard from Jeff there. I think the idea is the omni-channel. Someone comes in, they try on XYZ item, the pants, the top, etc. Then they go home and buy it. They have to be okay with that because that's clearly where the consumer is headed. And frankly, I've been in the office today, but our colleagues on the consumer team have been out there. They say it's dead.
Yeah,
so,
we were just reading the Kim
the
Bassine.
live blog on air.
I was like, what the heck?
They have to be able to take advantage of that and maybe use that as well to ship goods. Easier distribution of goods, so essentially making use of their retail footprint to offer a boon to the online space.
All right, Simone Foxman giving us a read here. Closer look at Macy's, but really a broader discussion, I guess, about what we can expect this holiday shopping season. And she mentioned it. I mean, we were looking at our T-Live blog, if you have a Bloomberg terminal. They've been doing a great job of kind of just doing on-ground reporting from these various retailers and what we see. And yeah, I don't know. If people are just buying coffee and pastries, I don't know.
Ralph's Coffee, etc. I got to say, I drove past the American Dream Mall on my way to the office today.
Did you not stop there?
I didn't stop there, and I was trying to peek inside. I was driving, and not that this is any reliable account, but it didn't seem that busy. I don't know. I didn't see any increased traffic around it or anything.
Yeah, and that seems to be what we're hearing from a lot of folks is you get a few people that still, I guess, want the thrill of being there. But for most of us, we're content to just do things. But we have to go back to something because this kind of went, I think, over everyone's head here. Do you not believe in Santa Claus?
No, I do. I do strongly believe in Santa Claus.
That's good.
Do I believe that Santa Claus is in my local mall? I do struggle with that.
Okay, I don't know. I mean, so you're like Will Ferrell and Elf when he like confronts Santa Claus in the mall. It's like you're not
my dad. Yeah.
Okay, there you go. Katie Greifeld. Let's make her a believer in Christmas again. Meanwhile, we count you down to the closing bell here. A truncated session set to end, at least for equity markets, within the next 15 minutes. Ellen Hazen over at FL Putnam going to be stopping by the big program. This is The Close on Bloomberg. This is the countdown to the close. I'm Romaine Bostic.
And I'm Katie Greifeld.
And if you think we're marching to the close a little bit early, that's because this is a truncated session here on this post-holiday trading day. The equity market set to close in just about 10 minutes time. And you take a look at some of the price action here. Volume is light. Remember, the day after Thanksgiving, typically the lowest volume day of the year. Unchanged on the S&P 500. The Russell is your outperformer here on the day. There's your VIX, Katie Greifeld. Not quite single digits, but certainly subdued.
Getting close, and you take a look at the bond market. So equities close at 1 p.m.
Yes.
Bonds 2 p.m. just to make things a little bit annoying.
Yeah, you'd think they would have coordinated that. And if you really want to be confused, we were going to do a commodities close today, but they all closed at like one was at 12:15, was at 12:40.
Yeah.
It was like grains at this time, and I don't know what the heck's going on.
I saw that in the rundown, and I thought that's Romaine's problem. I don't know what.
Yeah, well, I was talking to my producer, and she said the same thing, and we all decided, well, you know what? Let's just not do it at all. We'll just ignore it. I don't know. Can we flip up the board before we get to Ellen real quick? Because I wanted to show you something on the money market funds, because there was all this talk about everybody going longer duration and everything else. Money market funds, at least based on the Investment Company Institute, ICI, record high in the most recent week.
That's the thing, like $5.7 trillion, and where the money is coming from, I don't think it's necessarily a safe haven bid, whether that's coming from bank deposits, et cetera. It's been one of the most fascinating things to watch this year. But let's get into today's market action, what we're seeing in November and beyond with Ellen Hazen. She is FL Putnam Chief Market Strategist and Portfolio Manager. She joins us now. Ellen, it's great to have you. And we were talking a little bit earlier about what a great month this has been for the S&P 500. There's, of course, some seasonal factors there. There's some technical factors. But looking at this rally, how much faith do you have in it sustaining itself?
Well, what's been interesting about this rally, Katie, is that it hasn't just been the large cap tech stocks. The S&P 500, yes, is up over 8% during the month of November. But if you look at the mid cap indexes and the small cap indexes, they've actually done pretty well too. And because of that increased breadth, I think it bodes well for the sustainability of it. We've been saying for a while that we expect some of the big tech companies to tread water for a little bit because they got so expensive. And we thought some of the rest of the market would catch up. And we did see that happen earlier this year. But then for most of the third quarter, that really didn't happen, and big tech continued to dominate. But during November, we have seen other areas pick up, and the breadth has been across sectors as well. And so for us, that says that it's going to be a little bit more sustainable because there are a lot of companies participating that hadn't participated so much in the rally year to date.
And Ellen, it's a great point. It's something we were talking about earlier as well. But what was the catalyst finally to see the participation? Because a lot of people have been waiting all year for that. What finally is fueling that broadening out?
Well, it's hard to say, but I do think the Fed pause has had something to do with it. And so we saw the minutes come out earlier this week. They're signaling a little bit more dovish intent. And I think that small cap stocks do tend to be more sensitive to long-term interest rates. And so I do think that's part of the reason.
This gets to the question, though, I guess, Ellen, as a lot of folks now start to kind of take the tally of what they've made or maybe even lost this year and figure out what 2024 holds. Are we going to be as obsessed next year about where yields are going or not going and what the Fed is doing or not doing?
Well, Romaine, I hope not. It has been a long time since fundamentals have mattered more than the Fed policy. And yet, as a fundamental analyst and a fundamental stock picker, we look at companies and how much they can grow top line, what their margins look like, what their cost structure looks like, and how much they can grow bottom line. And for the last several years, that's really been, it's been subsumed by what's been going on with the Fed. So I do hope that the market will be somewhat less Fed focused and that the Fed can fade into the background. But it remains to be seen if that will happen. But as we do look at next year, there have been some interesting takeaways from Q3 with respect to operating leverage. And it gives us a little bit more hope looking into next year because you saw positive operating leverage for the first time in a few quarters. And that means that things are looking positive into next year. And most importantly, Romaine, it means that equities served their role that they are supposed to serve in an inflationary environment, that they could pass through the inflation and still grow earnings, unlike bonds that are, of course, negatively impacted by inflation.
Yeah. And I do want to look a little more short term, too, particularly given the monster gains that we're sitting on for the month of November in equities. I mean, setting up for what's going to be probably the best month in at least 2, maybe even 3 years, depending on what happens over the next week or the last week of November. But it really begs the question is, are we kind of just pulling forward maybe some of the gains that we would see in that Santa Claus rally at in the last week of the year?
Well, multiples for the S&P are somewhat higher than average. Although, again, it depends on if you look at it on a weighted average basis or an equal weighted basis, as we've been talking about and as everyone has been talking about all year. The largest market cap companies are quite expensive. Many of the rest are fairly cheap. And so I think you have to segregate those and look at them independently. The overall S&P, I think, could tread water for a while simply because the large cap stocks are expensive and you're not going to see those continue to outperform. But a lot of those small and mid cap companies have been inexpensive for a long time and they're beginning to catch up, and you do have room to run. So I think you do see a Santa Claus rally, but it may not be in the biggest stocks. It may be in some of the smaller ones and maybe some of the value stocks that have been left behind.
All right, Ellen, always great to talk to you. Ellen Hazen, Chief Market Strategist and Portfolio Manager over at FL Putnam, helping us count down to the closing bells. The closing bells in U.S. equity markets just about 4.5 minutes away here on the truncated trading session, Katie, on the post-Thanksgiving day.
And I don't need to tell you, but it is quiet out there. You take a look at volume right now. You don't often get to see these types of numbers. Volume at the moment currently about 35% lower than the 20-day average. Of course, to be expected on the day after Thanksgiving, but still pretty remarkable nonetheless.
Yeah, I was looking back at the data, and traditionally, I think last Thanksgiving we had something like 4.5 billion shares swap hands on the day after Thanksgiving. Remember, the average over the course of the last year is around 11 billion a day here, so we're well below our long-term averages, but pretty much in line with what we would normally have on a Thanksgiving day, post-Thanksgiving day, trading day. All right, stick with us. Romaine Bostic alongside Katie Greifeld, setting you up for the close of trading for U.S. equities on this Friday afternoon. Stocks relatively unchanged here on the day. Modest gains that we're seeing in the Treasury space on Treasury yields. We'll be back in a moment. This is The Close on Bloomberg. This is the countdown to the close. We are getting the closing bells here in New York on this shortened post-holiday trading session here in the U.S. Equity markets closing at 1 p.m. today. We should point out the bond market will continue trading in the cash session until 2 p.m., so another hour to go there. But you see the folks cheering, everyone in a good mood today. Volume incredibly light, typically the day after Thanksgiving, the lowest volume trading day of the year. Nevertheless, when you tally up the scores here, the Dow Jones Industrial Average is going to finish the day higher by about 0.3%, and that should be good enough for a fourth straight weekly gain. Similar story for the S&P 500, up fractionally, only about 3 points or less than 0.1%, but that is going to be enough to lock in a weekly gain, a fourth straight weekly gain for the S&P 500 as well. The Nasdaq in the red on the day, but still higher on a weekly basis. And the Russell 2000, while it is trailing on a weekly basis, it is the outperformer here on this Friday afternoon, a gain of about 0.7%, and that largely is because of the big slate of mid-market retailers in that index.
Yeah, there you go. I was going to say it feels a bit random that small caps are having such a great day, but there you have it. Let's talk about some of the industry groups as well. Quiet day overall, small moves to either direction. Up at the top, though, you do have food companies, your staples, et cetera, leading the way up about 0.6%. Then you have autos as well as some of your insurance names. You go down the list and you do have some laggards today. Again, small moves overall, but at the bottom you have tech hardware, you have semiconductors, and then you have media and entertainment stocks leading the way lower, down about 0.8%, Romaine.
All right, let's take a look at some of the individual movers here. Chipotle actually doesn't look like much there on your screen, only up about a fraction of 0.1% there, but it is up for a fourth straight day, and I believe that is still going to be good enough for a record high. And I do know for sure that is going to be a sixth straight week of gains. Right now, the longest a weekly win streak for Chipotle going back at least to 2021. iRobot here, that is the big gainer, at least on a percentage basis here on the day, up about 39%. And that's largely based on a report here from Reuters that the European Union is scheduled to finally sign off on that deal for Amazon to buy the company. A deal, remember, announced more than a year ago, August of last year. In fact, it was so long ago that Amazon actually reduced its purchase price just a few months ago, down from 61 a share to 51 share and change here. But it does look like that deal is set to close, and investors seem to be buying into it as well. Meanwhile, keep an eye on the retailers here. We saw a lot of names moving up and down on the day. Ulta Beauty finishing the day up by about 1%. An interesting note out by the folks over at Cowen, who are basically saying, look, here are going to be your big winners in the holiday season, and the two that they singled out are Walmart and Ulta. So keep an eye on that space and keep an eye on crypto. Bitcoin, I believe last time I checked, was above 37,000, and you're seeing that reflected in the shares of crypto-related stocks. That includes names like CleanSpark, Marathon, Riot, as well as Coinbase. Coinbase up 6% here on the day.
Romaine, I only put 3 decliners. I don't know how Carol and Tim usually do this. I went with 3. So let's start.
I'm an overachiever.
Apparently. Let's start with American Eagle. Shares down about 0.8%. Not too much in the way of new news, but this week on Wednesday, they reported earnings. It did not go over well. And on the heels of that, you had Morgan Stanley maintaining its underweight on American Eagle. It lowered its price target as well. You can see some of that sentiment making its way into the stock today, again, finishing about 0.8% lower. Also want to talk about Signet Jewelers. Again, no real catalyst today, but shares are off by about 2.6% or so, as you can see. Now, this company has had a very good November, as too has the broader index, up about 14% this month alone. They report on December 5th. Those will be important to watch, but wanted to highlight that today as we continue to focus on retail. And for number 3, because I only did 3, let's talk about Chegg. So this is another story that came earlier in the week, but basically you had Morgan Stanley downgrading them to underweight. That's after the company reported earnings, swung to a loss in the latest quarter, having a terrible year, down 59% year to date, and that's continuing today. Shares off by about 1.7%, Romaine.
And I'll just add one to that. Of course, NVIDIA down 2% on the day, third straight day of declines. That takes its year to date gains down to, I think, what, 230%. So no love lost there right now with the 2% decline on the day. Jess Menton, who helps lead our cross-asset market coverage, joining us right now on set here in Studio 2. And I should point out, too, I mean, the cash market for treasuries are still trading, but they've been on the back foot all day with the rise in yields here. And it's kind of that oscillation that we continue to see in some of those other cross-asset areas, including treasuries, including in FX. And I am curious as to how that's going to feed through into equities once we get back to, I guess, a more normal volume type of day.
Right, and especially looking at AVAT, it's one of the volume metrics that I like to use the function in the terminal. And so when you see how much volume's down, just on a 30-day basis, down about 40% there compared to what you've seen in the past month, you can see just how easily things could potentially be swinging, but also not a lot of movement on when you look more broadly for the S&P 500. But to your point, kind of from a cross-asset perspective, especially with yields and around that 4.5 level is really key there. And then also what's happening with the dollar story, any sort of strength there, if you see that. And especially on a technical basis, both the dollar and yields were around support levels. So that's something, especially going into December soon. So we still obviously have one more week before the end of the month, but that's something with those two key areas to see what that could mean for the broader stock market next month.
And Jess, we were talking about this about an hour ago, but talk to us a little bit more about this broadening out of the rally, because under the hood of what we've seen in November, I think that that's the really important story, that it's not just these 7 names, but what are you hearing from your sources about whether that's sustainable, whether that's something that's expected to continue?
Yeah, if you look right now, the number of stocks trading above their 200-day moving average for the S&P 500 is actually around 54%. If you look at that 20-day, though, which we were talking about an hour ago, right now it's around 90% once again. So sure, a shorter-term perspective, that's usually from technicians' point of view more of a bullish sign when you see that many stocks above the 20-day, but especially when you're thinking about some other industry groups beyond just the so-called kind of growth names, when you're starting to see that out. But also we're toward the tail end of earnings season. So obviously we've already had well over 90% of the market cap of the S&P having reported.
Well, that's what I'm curious about too, about kind of what, at least through the rest of the year, what ends up being the catalyst, because I'm just taking a look on a month-to-date basis, some of the gains that we had in this market, 8-9% on the S&P, we're over 10% gains on the NASDAQ just for the month of November. And even when you look at some of the kind of the sub-indexes, you know, like the Philadelphia Semiconductor Index and the bank index, they're all sitting on double-digit percentage gains on the month. And I guess the question here becomes, if we get into the end of the year where we're typically supposed to get that Santa Claus rally here, is that kind of over? I mean, have we kind of just pulled forward all those gains, or is there going to be more?
Well, Jeff Hirsch over at the Stock Traders Almanac, he's very particular about how people end up defining the Santa Claus rally. So it's actually supposed to be the last 5 trading days of the year and then the first two in the new year. Right. So it really won't start technically until December 22nd. So that's something that he always kind of harps on.
But what are they going to be? So it's never too early to talk about Santa.
No, it's not.
Please don't disparage Santa Claus. But what exactly propels that? Because sometimes that seasonality is usually a result of kind of the downturn that you typically get, the seasonal downturn you get earlier in the month.
So the tax deadline for a lot of mutual funds is typically at the end of October, but for individuals, it's toward the end of December. So usually you'll see small cap stocks, in particular you might see the Russell 2000 in the middle of the month because of tax loss harvesting. You'll start to see some moves there from a seasonal perspective. That's going to be interesting to see in the middle of next month, which also kind of corresponds with obviously the December 13th Fed decision. But that from a perspective of small caps, what they're doing for tax loss harvesting in the beginning, and then obviously in the middle of next month will be key to see how that shakes up going into, because obviously we've talked so much about small caps and how much they've underperformed the broader market for a while, not even just this year. This has been going on for a while, even though the Russell 2000 had hit a record actually 2 years ago now. It was in November of 2021, but underneath the surface of that year, there were a lot of small cap stocks that were really hit hard. And there's so many zombie companies when you're thinking about the percentage that are in the Russell versus the S&P 600. And there's much more from an earning perspective for the S&P 600, a lot healthier in that dynamic. So it's kind of not necessarily one size fits all when you are looking at small cap stocks.
Yeah, and it makes sense why the Russell 2000 and high yield bonds tend to trade together. Jess Menton, always great to catch up with you, of course. Jess Menton over on our equities coverage. Now coming up, we'll get more insight on the holiday shopping season and the future of shopping malls. We'll do that with Stephen Yaloff. He is the president and CEO of Tanger.
Plus, we're going to talk to Dana Telsey over at the Telsey Advisory Group, why she says the holiday shopping season is actually off to a good start and what trends she's seen in consumer spending.
And the days of using those noisy gas-powered lawnmowers, Romaine,
yeah, tell me about it. Those are big in my New
York
York City apartment.
A lot to look forward to. All that and more coming up. This is The Close on Bloomberg.
Welcome back to The Close. A focus today on retail, a focus on the health of brick and mortar stores in the face of some really strong competition coming from online shopping. But of course, not every brick and mortar is exactly the same. Some have an advantage that others don't. Joining us right now is Stephen Yalof. He's the president and CEO of Tanger, which runs a whole chain of outlet malls around the country here in the U.S. And Steve, great to have you here on what is obviously your Super Bowl, or at least the start of the Super Bowl. I feel like the entire month of December is going to be busy for you. Let's start off about kind of what we're learning with regards to foot traffic today here on this Black Friday. What are you hearing from your customers?
Well, the news on the ground has been great so far this morning. So we opened up East Coast. We're across the country. Our East Coast shopping centers have seen traffic build as early as 6 o'clock when we first opened, and they continue to build all day. So I'm getting reports from general managers. You know, we're a field-led company, so our general managers are the CEOs of each of their shopping centers, and those are the folks that I've been speaking to all morning, and I'm listening to what's going on the ground. It's very exciting. It's fun to be here, but it's really exciting to be in the centers.
I'm curious about the dynamic between sort of the brick and mortar experience going actually down to the stores and buying online. And I know some of the stores that you have under your portfolio, at least the iterations of them, you kind of have to go into the store in order to get the value and the discounts in a way that you might not be able to find online. How does that sort of play into what you expect to see this holiday season?
Well, first of all, I think people want to shop. They want to shop live.
Yeah.
They want to get out with their friends. They want to get out with their families. You know, Thanksgiving being a big get together, travel, be with people that you want to spend your holidays with. And getting out and shopping with them is a great social experience. So we're seeing cars filled with people. Not a lot of people jumping in the car and shopping by themselves on Black Friday. It's usually a car full of people. And what's great in our shopping centers is we not only have great retail stores with everyday value pricing for our customers, but we also have great food and beverage experiences. We've got other things to do for people in the car who aren't, shopping isn't their main goal today.
Yeah, exactly. Within that group that you're bringing to the store, not everyone is going to be as psyched to be waiting in line for the dressing room. But talk to us a little bit about how this differs at all region by region. As you mentioned, you're across the country. Right. We typically talk about online versus in-store, but are there any differences at a state-by-state level?
Not really. I think that outlet shopping centers shop far more regionally. Now, the South has always been our bread and butter. We're a South-based company. We're based in Greensboro, North Carolina. So a number of our shopping centers are really in the southern states. And we just purchased a new shopping center in Asheville, North Carolina. We just opened a shopping center in Nashville, Tennessee. So those are markets that we really know. And what makes both of those markets so great is not only the permanent population and the local customer that you get, but also that tourism and that tourist population that comes through those markets.
And talk to us about the younger generation of shoppers. Talk to us about Gen Z, because Gen Z, obviously, they grew up online. You would think about their shopping behaviors, and we hear a lot that it's tilted towards online shopping, mobile shopping. What are you seeing at Tanger?
Well, you have to work a lot harder to get that customer to come into your shopping centers. And that's something that we're committed to doing. You do it a number of ways. I mean, first of all, they're looking for experience. They're looking for better amenities. They're looking for the brands that they love, both the restaurants that they love, but also their brands. So it's really incumbent on us to make sure that we're flowing new brands, fresh brands into our centers. Direct-to-consumer brands are making a big play for the outlets now because it gives them an opportunity to showcase their product to that consumer that may just shop outlet, but also clear their excess inventory with controlling their pricing, their positioning, and the placement of the inventory. They're not in a big box environment where they're just put with other products that might, perhaps bring their brand down.
I'm glad you brought up inventory. I'm curious as to how inventory has sort of shaken out so far this year relative to the last 3 or 4 years where there were so many disruptions from the pandemic and a lot of other issues going on out there.
It's been very interesting. I mean, the narrative in 2020 and 2021 was, if you see it, buy it. The narrative in 22 was there's going to be plenty of inventory because the supply chain sort of broke open and there was a lot of excess inventory in the channel. Right now, I think a lot of the retailers are clean, but they plan. And they're very strategic about how they plan their inventory levels, particularly coming into Black Friday and the holiday shopping season. You know, our recommendation is if you see it, buy it, because as the values get better, closer and closer to the holidays themselves, the product that you're actually looking for may not be in stock.
All right, Steve, always great to talk to you, and I'll let you get back to work, a busy time of the year for Stephen Yeloff. He's the president and CEO of the Tanger Factory Outlet Centers. Now we want to take a break from our markets coverage, from our retail coverage, and go back to the big news that happened earlier today with the release of 24 hostages that were held in Gaza by Hamas. Now we are learning that the President of the United States, Joe Biden, is scheduled to address the nation at about 1:45 p.m. Washington time. We will bring you his comments as soon as we get them, so please stick with us. We'll have full coverage coming up here on Bloomberg. Welcome back to the close here on this holiday, post-holiday shortened trading day. A focus right now on the real estate market here in the U.S. as we push ahead to housing data next week. The latest indicators suggesting that the housing market could actually be thawing heading into 2024 after more than a year of depressed activity. Uma Moriarty joining us right now, senior investment strategist over at Center Square Investment Management, who focuses on the firm's public and private real estate investment strategies. And Uma, let's start off first with the residential market, which actually has seen a little bit more activity now that interest rates have stabilized and to a certain extent come down.
Thanks for having me, Romaine. You know, and that's a great question. I think we've had such a long period of time when we had mortgage rates that increased so far above what our recent memory really had in memory, right? And so all of a sudden now you're starting to see a little bit of this capitulation from consumers who are saying, okay, maybe mortgage rates end up staying a little bit higher and they kind of settle out here. And so if you need to buy a home at this point, maybe you're thinking a little bit more closely in terms of whether or not you just kind of pull the trigger at this point.
Yeah, absolutely. But then this gets to this idea, though, too, as to sort of what really is going to push someone to go out and buy a home, and for that matter, for folks to list their home, given that there are still just a lot of distortions in the market right now that probably have affected at least the perception of value.
Absolutely. You know, you still have so many mortgages that had been refinanced in the COVID period where you have mortgages that are well below 4%. Another interesting fact about the housing market, almost 40% of homes in the US are now owned outright without a mortgage. And so you have all of these people who would think twice about letting go of something like that, getting a new mortgage at 7% or even higher. And that's why you're seeing such a big shift in the home sale market towards new homes that are being brought to the market by home builders, because they can offer some of those rate buy downs and other incentives to get buyers out there.
Well, Uma, on that topic, I mean, you think about the lock-in effect, this idea that, of course, for those mortgages under 4%, if you have one of those, you don't want to give it up. And if you're looking at establishing a new mortgage right now at these super high rates, you don't necessarily want to do that either. I see that you write that we're past peak lock-in effect, but how real is it still right now?
We are starting to see more and more mortgages at that higher rate come into the overall marketplace from a mortgage perspective. That being said, you still have a really large percentage of the US population that has mortgages at those low rates. And so you still have a bit of that golden handcuff that is keeping the resale market at bay. And I think that's going to continue for a while here. You know, what you really need to see from a momentum perspective is effectively things just kind of settling out. Once we get to a point where people feel comfortable with, okay, now this is the new normal and no longer waiting for mortgage rates to get back down below 4%, that's when you're going to start to see a bit more momentum in the marketplace, I think.
And so, I mean, mortgages are one factor, but then you think about the structural factors. You think about the structural undersupply, and even if mortgages fall, I mean, home prices don't necessarily follow.
Absolutely. And especially currently in this market, you nailed it, right? We have the structural undersupply of homes, and we don't really have the type of credit issue that we had going into the GFC. And so I don't think we're really expecting housing prices to really come off in a meaningful way to impact this home affordability problem that we have in the US, broadly speaking. You know, in 2010, for example, 40 to 45% of new home sales were under $200,000. There are no new home sales under that price point today. You're looking at housing affordability at the highest level it's been, and the worst level it's been at for a long, long time. And that's something I think is going to keep a lot of folks renting for much longer, which is why rental residential is a big focus here at Center Square for us.
Well, and that gets, well, yeah, and I understand that. And it gets to the issue, too, of kind of geographic mobility. I mean, you're sitting in San Francisco right now. We're sitting in New York. I mean, two cities that, of course, really have felt the effect of people leaving for a variety of reasons. But a lot of that really has to do with the cost of living and really trying to be able to buy a house based on, you know, your current salary and not having to really go up the ladder. And we've seen that geographic shift. And I'm wondering, when you're trying to look for investment opportunities here, are you following that geographic mobility?
You know, what's really interesting from that perspective is that a lot of the migration you saw to markets like Austin, for example, have resulted in home prices in a lot of those markets starting to become pretty unaffordable as well. And you're starting to see a lot of home builders kind of respond, right? And so you're seeing more supply come through in some of those markets, and that will result in a little bit of that pricing getting a bit more under control. Some of the areas that we're actually focused on here at Center Square are actually some of the Midwest markets, markets that have been really, really strong in terms of job growth, and home ownership has necessarily not been a matter that has been impacted by the fact that we are seeing such big shifts in migration, right? These have been steady markets with really strong employment bases, but they haven't seen the same level of supply coming into the market. And so that has really impacted home prices in some of those markets. And those are some of the things that we're looking at, right? What are the fundamental demand supply dynamics that are impacting some of these markets across the US? To your point, coastal markets have seen some of that outflow migration, but then a lot of these Sunbelt markets have seen so much in migration that they've become unaffordable as well.
All right, Uma, great conversation as always. Really appreciate your time. That is Uma Moriarty. She is Senior Investment Strategist over at Center Square Investment Management. And Romaine, it's a really interesting conversation. There's a lot that we could pull apart here, but I think the idea that, okay, maybe we're past peak lock-in effect, but it's still real.
Oh, it's still real. And I was looking at mortgage. I mean, we talk about the drop in mortgage rates. I mean, we were above 8% on national average. We're still like in the 7s. So it's not like, you know, I mean, relative to what you could have gotten even just a year ago, there's no real bargains, at least not if you're financing the purchase.
And I always think about, okay, maybe we get back to the 5s, we get back to the 4s. You think about all the pent-up demand that is out there, and you think about the structural undersupply of housing in this country?
Yeah, and this is just pure speculation on my part, but I've been speaking with a lot of people who are in the market as well, and they look at, and some people are actually starting to say where rates are right now are attractive enough with the idea that they're going to fall and that they'll be able to refinance, say, 2-3 years out. So you get in at 7.5 now, maybe you can refinance at 5.5 2 years from now.
There's a lot of ifs there that make me nervous, but we'll continue this conversation on Black Friday. Dana Telsey joining us next. This is The Close. Well, with Black Friday marking the start of the holiday shopping season, retailers are finding it difficult to predict consumer sentiment. Now, as consumers spend cautiously across the board, retailers are bracing for what could be a difficult holiday season. Joining us now to discuss is Dana Telsey. She is CEO, founder, and Chief Research Officer over at Telsey Advisor Group. And before we get into potential doom and gloom around the holiday season, let's talk about Black Friday, because just in the commercial break, we were talking about how you compare this Black Friday to Black Fridays of 10, 15 years ago. It just feels like that same oomph isn't there.
You're not getting the rush of Black Friday that we have in years past. It's a different time. Keep in mind the stores aren't opening at midnight or 4 a.m. They're opening at, frankly, civilized hours, whether it's 8 o'clock or 9 a.m. And we're all seeing the deals that are out there, but they're not excessive. And stores aren't open on Thanksgiving Day. So overall, certainly, with inventories cleaner, the consumer definitely more measured. The moderated spend in consumer is happening among all income levels. And whether it's the focus on experiences, there is more than just goods. And don't forget, higher interest rates Inflation, even though moderate, is still higher. And you look at credit cards, delinquencies and bad debts, it's leading to a more cautious consumer.
Yeah, and I mean, just on Black Friday, I remember in high school I had friends that would wake up at like 3, 4 in the morning and go line up. You just don't hear about that.
You don't hear about
anymore. But when it comes to the discounts, the deals that are out there, you mentioned they're not excessive, and that's something else we've been talking about all afternoon. Are these just normal discounts disguised as Black Friday deals?
I think overall the discounts of 30 to 40% are normal deals. Are they disguised as Black Friday deals? No, there's definitely an extra couple percentage off compared to what it normally would be. But what you may not have is you may not have the excess goods at the end of the season. So those gift cards, which are always so popular, that get redeemed in the month of January, people may decide to spend it on other categories. The cooler weather is also helping us sell some of the outerwear.
I do want to read just on that point about discounts, because we have all our reporters fanned out. And one reporter, Daniela Cortina, is out at a place in Wayne, New Jersey. And she quotes a shopper there who was looking for wedding shoes. She said they were 25% off, but she chose not to buy them because, quote, that's not a Black Friday deal. And I do wonder if do we get into a situation where the retailers see maybe some softness in sales because they didn't discount heavily enough?
I think overall, when you think about the earnings that were just reported over the past few weeks, there was more clarity on the margins. They were able to generate better profits, even with uncertain sales, because they're managing, whether it's the supply chain costs are coming down, there's costs that they can manage. Are we going to get another bump up in promotions if they don't sell through? Don't forget, Christmas is on a Monday. So we have an extra long holiday season this year that they could take a little bit more if they need to.
But it also raises the question, too. I mean, you kind of mentioned the shift to services and experiences. And again, a lot of the anecdotal evidence we're getting is people are going to the mall, but they're outside the Wetzel's Pretzels, or they're on Fifth Avenue in front of Ralph Lauren, but they're going to the Ralph Lauren coffee shop instead of actually going in there and buying
You've seen it as busy as I have.
Things like that. So, but it gets to the point. Maybe people do want the experience of being at the mall or being at these brick and mortar retailers. That doesn't necessarily mean that they're going to like whip out their credit card and spend big.
Right. This Black Friday, it'll be a decent Black Friday. And keep in mind, overall holiday sales are expected to be up 3 to 5%. That compares to 5.4% last year. And in essence, that is not a big breathtaking holiday season or Black Friday. It's a decent one. So overall, I think that the consumer is managing things. And let's not forget, many people haven't had big Thanksgivings with their families in a while. So they had it this year. What I've been seeing out there on the streets this morning is you're seeing families going together. So maybe they're looking and the spend will come later. It's a little bit of both.
Yeah, and of course, it'll be interesting to see the data when this finally clears up. But something else that we've been talking about a lot today is sort of the breakdown between online spend versus brick and mortar. And you talk about that experience. People want to get out and experience the mall, experience the stores, maybe see the holiday lights, et cetera. But still, when it comes to the online spend, how dominant is that becoming?
It's becoming dominant. It does have a place. And overall, yesterday, I think, was a very good day in online shopping. We've heard that an increase of around 5%, maybe plus a little bit, is what it drove. I think the physical presence of being in a store and the omni-channel focus with buy online, pick up in store, and ship from store is still very much there. I think typically we're seeing physical continue to be the place to be, especially with the holiday season. But you need both. It's not either or.
Well, zooming out just from Black Friday and holiday shopping, I'm curious to hear your thoughts on something else that we've been talking when it comes to the consumer. At least in Manhattan, you walk into a CVS, you walk into a Duane Reade, everything is locked up. And I've seen some analysts advance the theory that maybe that's why you're seeing a lot of that sort of spend, for essentials, toothpaste, et cetera, shift online. How much water do you put behind that theory?
I think that holds. I mean, when you go into a store and you see, especially fragrances, definitely in the beauty stores where it's boarded up or you need a lock and key in order to get it, doesn't make the experience great. It minimizes the ability to do additional sales and add-on sales. So it's something that we're going to have to live with right now. But the experience is nicer when you don't have that.
I am curious, though, just real quickly, though, how are retailers determining what to do? Because just an interesting note, I was in the Nordstrom here in New York, and nothing was really locked down. But just a few weeks ago, I was in Nordstrom in Atlanta, and everything, at least like the purses and stuff, they had the cables around them, the coats, everything. So it's kind of interesting to see the dynamic, even though I would think both stores are serving the same type of customer.
Yes, I think where they've seen incidents before, I think that's how they're monitoring it. And I think the retailers and landlords are combining together in order to make a more safe place, both for the sales associates and the customers.
All right, Dana, great conversation as always. Really enjoyed this. That, of course, is Dana Telsey. She is CEO and founder of the Telsey Advisory Group. Now, still ahead, we're going to stick with retail, but dive deeper into consumer demand for home goods and fixtures. We'll do that with Andrea Varnado. She is head of consumer business over at the Kohler Company. That's next. This is The Close on Bloomberg.
All right, let's continue our conversation here about the retail space and the housing sector and the combination of those two. A discussion here about how the weak housing market might actually be impacting consumer demand for home goods as well as home fixtures. Andrea Varnado joining us right now, head of consumer business and a corporate board director over at Kohler. You know it, of course, bathtubs and faucet fixtures, all those high-end things that I don't think would be a traditional sort of Black Friday shopping experience, but you guys are all in on Black Friday like everyone else. Do people actually buy Kohler products for other people, or are they just buying really for themselves on Black Friday?
You'd be surprised how the home goods industry has really evolved over the last 10 to 20 years. I think we've seen surprises with what people are buying online, who they're buying for. So yes, they're buying both for themselves, they're buying for their children, they're buying for friends. It always makes great gifts. But what we do see when it comes to Black Friday is that these are purchases that are typically made later. They're much more thoughtful and much more intentional. And so you see them later in the season and later in the opportunity, but certainly a great chance to participate.
How has, I guess, the shopping experience or the shopping trend evolved? We've been talking a lot today about kind of the omni-channel experience and even some folks just ditching brick and mortar altogether and just doing all their shopping online. I mean, for a company like Kohler, why I think more people would want to sort of be able to feel and touch the product before they commit to such a big ticket item like that. How exactly has that sort of omni-channel strategy worked or not worked for you?
It really works in our favor because we do have stores and we do have an online presence. It really depends on how the customer wants to shop. We see a generation of customers that don't mind buying big purchases online. We've seen the same thing in the automotive industry. We've seen it in the furniture industry. Why not move it into a different industry as well? There's a lot of research that can be done. So everything that you're looking for your product information, for your specs, you can measure at home. You can talk to partners, as well as you can even bring in some configuration and augmented reality that helps to give that same confidence that you would in stores. I will say in stores, there's still an immediate gratification era about it. You still want to have that experience, that touch and feel, that expert guidance. So we're always looking to how can we blend those two experiences, whether you're online or in stores.
Well, to follow up on Romaine's question, I mean, I think if I'm buying a toilet, I want to see what it looks like. I want to turn faucets, et cetera. And with that in mind, I mean, are stores increasingly turning into showroom type experiences where maybe someone comes in and looks at the bathtub that they'd like to buy, but maybe ultimately makes that purchase online?
That's a great point. We've heard about showrooming for about the last 7 years, but surprisingly, no, we are finding that customers, they want to make that purchase, especially as you just mentioned. It's a high ticket item. It's a big investment. And so once you have that immediate confidence in the store, you're willing to make that purchase right then and there, especially because you've had that expert guidance with an associate who's invested so much time and you trust them. And so you trust them for the next stage, whether it's delivery, installation, or questions. You have that person that you can always go to. So that store experience will still see a very high number of transactions.
And I'm curious, too, about how you're thinking about discounting. I mean, most of our conversations today have centered around you're not seeing maybe the excessive discounts that maybe you saw in Black Fridays previous. When you're offering deals, when you're offering bargains, how are you thinking about that over at Kohler?
It's not necessarily about a bargain. It's really about the value because, as you mentioned, these are really long-term value products. And so we think about what can we provide, whether it's a limited time product, whether it's a different experience, whether it's a service. That is really what comes different when it comes to home goods is there's an excessive piece of it or an extra piece of it that goes into not just making that purchase at a discount, but what is that long-term value? So whether it's that warranty, whether it's the delivery, whether it's the installation, all of those pieces go into it. And so we aren't necessarily focused on the price because we do think that there's a really strong value that goes along with the existing price, but there's certainly opportunity to drive additional value even on Black Friday.
Andrea, I mean, one of the reasons why I was intrigued to talk to you was also just your background. You've been at a lot of different places prior to you got at Kohler. So you have a wealth of experience in just dealing with, I guess, brand identity and brand recognition. And I'm curious as to how much that has evolved. You know, I mean, there's just a different approach that retailers, and for that matter, just even services companies have to take, not only to get you to sort of just recognize your existence, but more importantly, to actually remain loyal. How do you do that?
That's a very great point. And so what we end up seeing is when it comes to that brand identity, it's about that value and that meaning that we're providing to you. So we're continuing to look into the most innovative experiences and products, whether it's our most innovative intelligent toilets or our showering capabilities, things that really stand out in the market. We're looking at limited time offerings. We're looking at great partnerships that we have and really focusing on the seasonal and thematic things that our customers need. And so to your point, when it comes down to how are we maintaining that brand recognition and that relationship, it's really about that intentionality. We've heard companies talk for this several years about customer data, around personalization. And so we're looking to get to know you, where you are in your customer journey and your purchase journey, what you've purchased from us before that you might need to either refresh or build upon. That's how we're really building that relationship. It's about the product messaging, the marketing, and giving you that confidence and that experience that we're driving.
All right. This was a great conversation and really appreciate you taking time for us on this day. Andrea Vernata there. She's head of consumer business and a corporate board director over at the Kohler Company. Now, Katie Greifeld, a little bit earlier, I told you that I was really looking forward to you getting me a pizza oven. But while we were talking to Andrea there, I was actually going through the Kohler website here.
Yeah.
They've got a Numi 2.0 toilet. This is now a smart toilet, dual flush. It lights up. It has ambient colored lighting, built-in audio, as well as quite a few other things.
Audio.
And look, it's marked down from a list price of $11,500 all the way down to $8,625.
Price tag alone, I don't think I would want a toilet that's smarter than I am, that can do more things than I would be careful about that, Romaine.
Yeah, you think that's going to be the apocalypse? Everyone's so obsessed about.
Maybe that's what OpenAI was
is working on, but it's really the toilets that are coming for us. I have to tell you, I was in this hotel a few weeks ago here, and they had this whole tricked out toilet. Yeah, it was one of the Japanese brand. I can't remember the exact brand, but it was one of those Japanese brands. And literally everything you had to operate to do this touch screen.
Yeah,
so, and it had like the built-in bidet and everything. I won't give you too TMI, but let's just say I didn't want to get up.
I don't know. Again, I go back to, I feel like maybe I've been on some of those toilets before. It starts doing stuff you didn't ask it to do. I want a toilet that
it did take a while to figure out, but by day 2, I was all in on it.
Oh, yeah.
Yeah, and I told my wife we have to
steep learning curve, but once you're there.
Yeah, I was all in on it until I looked at the price, and I was like, I'll just deal with my crappy little Home Depot special here. No pun intended. All right, coming up here, could it be the end of those noisy gas-powered lawnmowers? Katie Greifeld?
I'm excited to find out.
All right, we are going to find out. Don't go anywhere. That discussion coming up after the break. This is The Close on Bloomberg.
Well, it's that time of year again. The leaves are falling and gas-powered leaf blowers are screaming away. But with landscaping tools increasingly going electric, that could all soon be history. Bloomberg's Simone Foxman has more.
Lawnmowers and leaf blowers are an unmistakable staple of middle-class suburbia. But on any weekend morning, your neighbor's yard work may soon sound a lot more like this. That is, if it doesn't already. Starting next year, California will ban new sales of gas-powered leaf blowers and lawn mowers, in part because of the pollution they generate and in part because of the noise.
The results are going to be a dramatic reduction in smog-forming pollutants and greenhouse gas emissions, a dramatic reduction in health impacts.
Cities including Naples, Florida, and Washington, D.C. have already banned the usage of gas-powered lawn equipment. And in fact, gas-powered lawnmowers may be one of the first consumer appliances to go entirely electric, partly because of the energy efficiency concerns, and partly because it just makes good corporate sense.
We are very electrification forward. What we're putting our R&D efforts towards, what we're putting our advertising towards, it is all towards electrification. electrification.
California Air Resources Board estimates that running a gas-powered lawnmower for about an hour is equivalent to driving a car for 300 miles. For a leaf blower, it's 1,100 miles. Electric models, especially for bigger machines, are still more expensive than gas. A riding mower may cost double the price of a gas-powered one. California's earmarked $30 million to help landscapers make the transition, and Assemblymember Berman says he's pushing for more.
If you can use the equipment for 3 years or longer, you'll save money. But it's that upfront cost that it's important that we provide support to landscaping professionals.
California is often a first mover on energy efficiency standards because the federal government allows it to set its own rules that can then be adopted by other states.
The bill was very ambitious, and it was, to be honest, the toughest bill that I've run in 7 years in the Assembly.
Corporate America is already going electric, says Potter.
As a company that really is built on electrification, we love electrification and see the benefits of the lower noise and the ease of use. The legislation probably hasn't caused us to do anything differently. It may just, tweak where we sell to.
And for manufacturer Husqvarna, electrification may actually be an opportunity to sell homeowners on something relatively new, robots.
So we have been making autonomous mowers or robotic mowers for almost 30 years. Robotic mowing is definitely a new opportunity that it wouldn't exist there if it wasn't for this, obviously, journey to electrification.
In New Jersey, I'm Simone Foxman, Bloomberg News.
All right, Bloomberg, Simone Foxman, I'm thrilled to say, joining us live now for more on this. Simone, great reporting as always, and a lot of talk about California's new ban, but how are we seeing this potentially play out elsewhere in the country, particularly in New Jersey, where you actually filmed that?
Yeah, I mean, there have been municipalities around the country. You go in New York, Larchmont has a similar rule, Washington, D.C., Naples, Florida. And they've banned usage, right? Because if you were you could potentially buy a gas lawnmower in a different county and bring it back and use it there.
Like fireworks.
Exactly. They've banned usage, whereas California is the first state to really ban new sales of this. Now, this is not something that everybody loves. In fact, Georgia passed a rule to stop the municipalities from imposing their own laws on usage to prevent gas lawnmowers. So this is all a very contentious issue. And
Did they just do that out of spite, or was there some scientific?
It's a
rhetorical question.
People really love their gas lawnmower. I mean, we live in New York City. We don't know, but
can I just say? I haven't always lived in New York City. And I have to tell you, I don't know. Maybe they've evolved in the few years since I've been in New York City. But when I had a house, the gas power ones were just more efficient. In terms of doing the job. Now they obviously polluted more, and I'm sure they made a racket. But if you're just trying to get those leaves up as quickly as possible, do the electric ones really compete with that?
Well, now, Wirecutter, Consumer Reports, they say yes, they do. But only in the last couple of years. And I will say that I got some responses to this story saying, I tried to go electric and it didn't work.
Well, but also to this point too, though, most people aren't going to buy a new lawn mower or leaf blower. If you buy one, in theory, you're going to keep that thing until it breaks, which could be 10, 20 years down the road. So if I just bought a new gas-powered one of these things a couple years ago, you're saying that I can't actually use it? Do I get does California compensate me for that?
So you can use it in California. The California ban is just new sales.
New sales.
So there will be gas-powered lawnmowers and leaf blowers for a while, provided that your municipality doesn't actually ban those things. That said, that's why the burden of this is really falling on the landscapers, because they're gas-powered blowers.
And they use these things here in New York because they use it to clean the sidewalks, where they just basically blow the leaves into the street, which I always thought that's not really cleaning. That's just that's like if I just took the garbage out of my kitchen and just went to my neighbor's apartment and just dropped it in front of her door.
Yeah.
That's not really taking out the garbage.
That's
just
not
sort of
necessarily.
That's a reallocation of garbage.
True.
Aren't there supposed to be street cleaning trucks? I don't always see them. Sometimes they go right in the middle of the street.
Aren't we cutting the budget? I don't know.
There's a lot going on here. Simone Foxman taking a look at what for a lot of people is probably one of the more consequential issues out there right now, and that's the noise that comes from some of those leaf blowers and lawnmowers.
Yeah, and you have to wonder what's next. We're canceling lawnmowers, gas lawnmowers. I don't know.
I thought cancel culture was over.
No, not when it comes to gas-powered vehicles and appliances.
Yeah. How is this going to affect holiday shopping? Does Home Depot and Lowe's, do they just have to completely clear out any of
all
their
of their
gas-powered inventory.
Yeah, maybe you're going to
put
see
it in.
lawnmowers on deep discount. Maybe that's going to be the deep discounts that you actually see, because as we've been discussing all day, not necessarily the excessive discounting that maybe we saw in Black Friday's past, but seems like we're seeing a pretty strong showing overall.
Yeah, pretty strong showing overall. And if you're wondering why Katie Greifeld and I are on your screen right now, that's because the markets are actually closed today. So if you're still watching us, congratulations. The cash market for equities closed about an hour ago, and the Treasury cash session shutting down right now.
4 minutes to go on bonds. A sell-off, pretty unchanged day on equities, but you can see that yields are rising, but still a lot lower than where we were about a month ago.
All right, gobble, gobble, everyone. Thanks for watching us. Katie and I will be back on Monday. Get out there, do some shopping, support your local economy. This is Bloomberg.